Hello and welcome to the Mehmi Group podcast. I'm your host Haider Malik, and today we're exploring smart cash flow strategies for truckers using factoring and credit lines to keep your operations running smoothly in lean times. In the trucking industry, the challenge isn't just moving freight, it's making sure you have enough cash to cover fuel, payroll, maintenance, and unexpected repairs while waiting weeks for invoices to clear. Factoring lets you convert unpaid invoices into immediate cash by selling your accounts receivable to a factoring company at a small discount. Instead of waiting 30 to 60 days for payment, you receive up to 90% of the invoice value within 24 to 48 hours. That fast cash injection helps you pay drivers fuel bills and shop invoices without overdrawing your account. A credit line is a revolving source of funds provided by banks or specialty lenders. You apply once and get approved for a maximum credit limit, up to which you can draw funds as needed. You only pay interest on the amount you use and often a small commitment fee on the unused portion. Credit lines are ideal for covering unexpected spikes in expenses like major repairs, fines, or seasonal slowdowns. Combining factoring and a credit line gives you maximum flexibility. Factoring handles your regular weekly or bi weekly cash requirements, while your credit line stands ready for emergencies or gaps between loads. When negotiating a factoring agreement, focus on advance rates and fees. Many factors advance 80 to 90% of the invoice value and charge fees around 1 to 2% per month of the invoice amount or value. Understand whether you are signing a recourse or non-recourse agreement. In recourse factoring, you remain liable if the customer fails to pay. In non-recourse factoring, the factor assumes that risk at a slightly higher fee. Credit lines vary in structure but typically include an annual or quarterly facility fee on the total approved limit plus interest on drawn balances. Interest rates are usually quoted as prime plus a margin ranging from 2 to 5% based on your credit profile and collateral quality. To qualify for factoring or a credit line, you will need to provide basic financial documentation, including recent accounts, receivable aging reports, bank statements, and equipment schedules. It's also important to maintain accurate invoicing practices, complete load confirmations, and resolve disputes quickly. Factors and lenders rely on clear documentation to release funds without delay. Best practice is to maintain unused availability equal to at least 10% of your historical monthly revenue between the factor and your credit line. That cushion ensures you always have a backup source of cash and prevents last minute scrambling when unexpected costs hit. Use simple accounting or cash management software that integrates with your factoring portal and credit line statements so you can see your cash position in real time. Create a rolling cash flow forecast projecting revenues and expenses for the next 30 to 60 days. This forward looking visibility helps you decide proactively whether to factor an invoice or draw on your credit line rather than reacting under pressure. Regularly review your factoring fees and credit line terms as your volume grows and refinance opportunities arise. Building a strong relationship with your factor and lender can lead to higher advance rates, lower fees, and more flexible covenant terms over time. Consider renegotiating your advance rate or fee schedule annually once you demonstrate timely collections and stable revenue streams. Tracking key performance metrics such as day sales, outstanding average, advance percentage utilization ratio, and interest paid enables you to measure the effectiveness of your cash flow strategy and make data driven improvements. Finally, remember that effective communication with your factor and lender is essential. Keep them informed of any significant changes in revenue projections, equipment additions, or major maintenance events. Transparent information sharing helps them support you more effectively and may unlock creative financing solutions. When you combine reliable factoring for routine cash conversion with a flexible credit line for contingencies and maintain disciplined financial management, you build a resilient cash flow infrastructure that enables your trucking business to thrive in any market condition. To learn more about factoring and credit line options tailored to your unique needs, visit memigroup.com and fill out our quick finance form. Our specialist will guide you through the application process and help you secure the working capital you need to keep your wheels turning smoothly. I'm Haider Malik. Thanks for listening. And here's to steady cash and safe miles on every haul.